crucial part of the whole fundraising process, because without doing it successfully, you probably won't get funded. So really, to an investor like myself who sees hundreds of potential investments a year, anything that you can do to make the process easier and make your idea, your pitch stand out from all of the others is really crucial. So, you know, getting an introduction from somebody, probably the single best way of getting a meeting with a venture capitalist in particular is to get an introduction from somebody that VC already knows. It's really a part of the filtering process, and that could be another entrepreneur, it could be a service provider, it could be a friend, but the introduction is really important and can circumvent a whole lot of other hassles.
So, so for you, that's number one, is it? To get that introduction from someone that you know, and that you hold their, you know, that they're credible for you, and that's the link, is that?
Yeah, that's true. I think probably much like the book publishing industry or the film industry, it's rare that random proposals that get pushed under the door get funded. It's not that they don't, but a proposal that comes via an introduction is really the first part of the screening process. It means that, gee, if this other person feels good enough about this entrepreneur to recommend them to me, then that's probably, you know, worth a look at.
So a big part of that's networking, I'd imagine. Entrepreneurs should go to events and functions and sort of get in touch with the investment community as much as possible, and then you've kind of got a face to the name. Would that be a... That's
absolutely correct. And there are lots of networking events in Australia and in Queensland, and most VCs who are interested in finding good investments will actually go to those as well. So it's a great way to meet people, meet investors directly, but more significantly, a great way to get known by others who can then recommend you. I think sort of underlying all that is just being persistent. Persistence really counts for a lot, and I couldn't tell you the number of times that I've sort of actually ended up taking a pitch because the entrepreneur was actually persisted. Not to the extent of being annoying, but that persistence sort of was came across as passion and commitment, and that's a really important thing.
And that's a fine line, I guess, between being annoying and you wishing they'd go away, and finding the balance between the persistence, which you interpret as passion and enthusiasm, and these people really are working hard to get in front of me.
It is. And in fact, you know, one of the key things I think you've got to get across in a pitch, should you be so lucky to get one, is the fact that you're passionate and absolutely committed to the proposal that you're making. Not that it's some sort of offhanded, part-time sort of, gee, I'll just give this a quick try. You know, somebody who's persisted with trying to get that meeting, I think has already in a way demonstrated that they've got a commitment to it.
Yeah, the passion is interesting, and it comes up a lot with, you know, in this whole market. And I think some people misinterpret what passion's all about.
Yep.
How do you, you know, what would you describe as someone who's got passion in their approach and wanting to promote their business?
Well, I think it shows that they've been prepared to make sacrifices to get to where they are, and that they show an enthusiasm and really an enjoyment of what they're doing. You know, it's going to be it's usually a long haul to from the point of investment to the point of you know, making a real company with real value to it, and to the investor, the biggest risk is in some ways the key people, the entrepreneurs and the founders, losing heart and you know, giving up in the short term. So the reality is that particularly early stage investors like me and my firm, we're really actually investing in people. We're typically not even investing in a company. Often there isn't a company yet to invest in. You know, we're helping create those companies. So So we're investing in people, and it's very important through this process that you convey, you know, just how committed you are. Not to mention how knowledgeable you are, and honest, and so forth.
So the investors got into your boardroom, and you've got your investment committee there and ready to hear the pitch. What are the essential elements that the entrepreneur and his or her team has to do for you to want to go to the next meeting? Okay, let's take this to the next stage. In that first pitch that they give you, what do they really need to demonstrate and give to you and your investment panel?
Well, apart from just being, you know, getting across your personality and your enthusiasm and long-term commitment, which is a given, really what the core value proposition is of your idea. Whose problems is it going to solve? You know, why are people going to want to pay money for this thing that you've got? And you know, you should spend a bit of time describing the technology and the product, but only a little bit. A lot of time talking about yourself and your experience and your background and your team members, not just you. And finally, you know, what you've thought about the market. It's not required at an early stage that you have all of the answers, but it's important to demonstrate that you've given it a lot of thought and you've identified what the issues are that are going to have to be tackled to make this a successful you know, investment. And so you know, I think, you know, they're the key things. I think the other thing is that I want to know how big this could be. I mean, it's okay to talk blue sky. You're not going to your bank manager to get a loan. You're actually you're really securing a partner, and for us, we would like to know that this could be huge, and we know that, and we recognise the fact that you don't yet know how to necessarily do that, but we want to make sure that there aren't any sort of fundamental structural impediments to your idea potentially being, you know, another Microsoft. Now we'll work with you then and on getting there, and we recognise that over the long term there's going to be a lot of hard work and some luck, but don't come with a really conservative pitch. That's not what we're looking for. We're looking for people who have ideas that look like they could be really, really big.
The next big one. The
next big one, yeah.
So when you say to make sure there are no structural impediments, just expand on that a little bit more.
Well, you know, we look for businesses that will scale. You know, for a venture capital investor, and given the returns that they've got to give back to their own investors who are taking a very high risk investment, they've got to see that every company that they invest in at least has the potential of being able to scale rapidly. That it's not just going to get to be a little comfortable sort of, you know, $1 million a year business that pays a nice salary to the founders but never goes anywhere. So we need to satisfy ourselves that, you know, given some capital, given really good people, and a bit of luck, this thing could really scale to something big, both locally and in our case, we look for global sort of scaling.
Global markets. What are the most common mistakes that entrepreneurs make when they're in the room pitching to your company?
Look, the single most common mistake, without a doubt, is spending too much time talking about their technology. It is absolutely the biggest single failure, because think of it, you know, often the people that we invest with are engineers and scientists by background, and they really have spent their heart and souls working on, you know, creating the underlying technology, and so they'll spend 75% of the time in the first meeting just talking about the intricacies of their technology, and in a way they're proud of it and they want to show in some ways how clever they were in creating it. The reality is that very, very, very few venture capital investments fail because the technology didn't work. They usually fail because there was no market for it, or nobody wanted to buy it. So